Very good evening and welcome to the India Development Debate. I'm Tamanna Inamdar. Yesterday, the Reserve Bank of India stopped M&M Finance from using third-party recovery agents. This action followed news reports of a horrific incident in Hazaribagh, where a recovery agent of an agency that had been outsourced by the NBFC actually ran a tractor over a pregnant lady while trying to recover the tractor. The tractor had been taken on loan by her father, who could not pay back the money. Now, the details of the case are still awaited, but this incident has brought into focus the use of recovery agents by financial lenders to recover their money. It's a complicated scenario. It's not all black and white. Of course, there is no question that there can't be illegal acts to recover money, but the NPAs and the harm and the challenge in recovering money is something that financial lenders actually do face. So we're going to discuss the story and all angles of it, also understand why third-party recovery agents are in play in the first place. All of that coming up on the show, but first let me take you through what's trending tonight. Sharp cuts coming in for the Indian markets, extending losses for the third straight day. Nifty closes below the 17,400 levels, while Sensex sheds over 1,000 points. Broader markets bleed, falling more than 2% each. 7 lakh crore rupees of investor wealth eroded in 3 days. Even on Wall Street, the Dow sheds over 400 points to trade below 30,000. Indian currency breaches the 81 versus the dollar mark, marking its worst week in 1.5 years. Even the pound falls more than 3%. That's its most since March 2020. This comes days after the Fed signaled more rate hikes and US yields continue to spike. Now, new age over-the-top or OTT communication services like WhatsApp, Signal and Telegram may come under the ambit of the Telecom Ministry. The ministry has issued the draft Indian Telecommunication Bill 2022, which will bring all types of communication services under one umbrella. Mega consolidation plans for Tata Group's metal companies cheer Tata Steel as 4 listed and 3 non-listed entities will be merged into the company. The proposed amalgamation is part of Tata Group's journey to simplify the group holding structure. The big political development in Maharashtra. The Bombay High Court allows the Thackeray Sena to hold its traditional Dussehra rally at Mumbai's iconic Shivaji Park. It's a setback for the Shinde camp that also wanted to hold its rally at Shivaji Park. They will now hold a competing rally and in MMRDA grounds on the same day. Let's begin with how markets performed today and this week. It was a bad day. Freaky Friday for the markets, a bloodbath on Dalal Street, extending losses for the third straight day. Indian benchmark indices tanked almost 2% to close deep in the red and also erased their entire gains for 2022, turning negative for the year. Nifty closed below the 17,400 mark, while Sensex tanked over 1,000 points. All sectoral indices slipped in the red, barring Nifty Healthcare. Financials and metals were the biggest drag this week. Stocks on Wall Street don't seem to be cheering the Fed Reserve's fight against inflation. In fact, all 3 major US indices are trading in the red. The Dow is down over 400 points and is trading below the 30,000 mark for the first time since June 17th. Essentially, fear setting in on Wall Street that the Fed may take the inflation control measures a bit too far. Let me bring in now Anisha Jain, my colleague, to give us all the details of market action for today and this week.
Well, with a 300-point decline on the Nifty, the Indian markets have reversed all of the gains that they had made in 2022. And for now, we are tracking in the red territory with the Nifty just around that 17,300 mark. We saw bigger carnage coming in when it comes to the broader markets because both the mid-cap and the small-cap index ended the week with quite a bit of cut. And on Friday itself, we saw them declining by anywhere between 2 to 2.5%. Not just the equity markets, a lot of action coming in from the currency world as well, wherein rupee went past the level of 81, tad bit strengthened from there, but still continues to be very volatile as the dollar index is now past the mark of 112 as well. A lot of action in the 10-year yield as well, wherein the gap between the US 10-year as well as Indian 10-year has narrowed and it has come to the lowest level in 12 years. Remember, the US 10-year is now at 3.75, and that is something that the Indian markets are also tracking because that lends a lot of risk-off sentiment across the globe as well. Talking about our own markets and the performance this week, in terms of the sectors, it was the banking index that was coming under pressure. So that has shaved off a gain of 3% this week. Just last week, we had seen it hitting a record high level, and from there, we have retraced as much as 5%. The sector that held out in the green this week was clearly FMCG. So Marico was up 7%, HUL ended the week with a gain of 6%, and other names like ITC and Britannia also had a good week. So Pharma and FMCG were doing well this week, while banking names, realty and energy were the top losers.
And more rejig in Tata Group companies. All 7 metal companies will be merged with Tata Steel. This will include 4 listed and 3 non-listed entities. Investors gave the move a thumbs up, with the stock gaining over 0.5% in trade. Let me bring in Somit Sarkar to tell us how this amalgamation will help the companies.
Well, 4 listed companies will be merged into Tata Steel, that is Tata Metallics, TRF, Tata Steel Long and Tinplate Company, while 3 unlisted entities, which are mostly a wholly owned subsidiaries of Tata Steel, will be merged with the company. So firstly, for Tata Metallics, Tata Steel will be giving 79 shares for every 10 shares that a shareholder owns in Tata Metallics, and the share swap ratio, if you see, that's marginally in favor of Tata Metallics. It's valued at a premium of close to 2% For Tata Steel Long, if you see, Tata Steel Long shareholders will be getting 67 shares for every 10 shares that they hold, and the share swap ratio in this case is in favor of Tata Steel, and the Tata Steel shares are actually valued at a discount of close to 4.5%. When it comes to Tinplate, the share swap ratio is that Tata Steel will be giving 33 shares for every 10 shares of Tinplate company, and the share swap ratio is largely at par with what the current valuations are. But when it comes to TRF, Tata Steel will be giving only 17 shares for every 10 shares hold, which values TRF shares at a steep discount of 53% compared to yesterday's closing price. But if you see the share price chart of TRF, it has been hitting continuously on an upper circuit for the last quite few days. Now, along with this, if you see the merger exercise is in line with what the group chairman had earlier suggested, that they will be looking to simplify the group structure. Earlier another Tata Group company, that is Tata Consumer, had announced similar kind of reject with Tata Coffee also. So largely this is in line with what the group plan is, to simplify the group structures and to simplify their inter-corporate holdings.
Getting a loan right now because of digitization has become very, very easy. It sometimes happens in a matter of minutes or a few hours. But what about the process of repayment? And more importantly, the process of loan recovery. Loan recovery and the action of some loan recovery agents or agencies who outsource the whole act of loan recovery by financial lenders has now really come to the fore. The trigger was a gruesome incident on September 15th, where a woman was crushed to death by a recovery agent from M&M Financial Services. What he was recovering was the tractor, and this happened in Hazaribagh. He actually drove away from the tractor. This pregnant woman was standing there protesting this, and he ran over her. The Reserve Bank of India was quick to react and barred that NBFC from outsourcing its reprocessing activities to third-party agencies. But is this enough? What about the bigger picture, and why are lenders resorting to these third-party agencies for the recovery process? Now, most financing stocks have come under tremendous pressure in trade with this news coming in, but we're not just looking at the financial side. We're looking at why this business requires the aspect of such aggressive recovery agents. But before we do that, let me go across to my colleague Ankur, who's joining us with more details of the story. Ankur, tell us exactly what happened in this case. What was the order by RBI on the 22nd of this month, and what are its implications?
Yes, the Reserve Bank of India has taken an action on Mahindra and Mahindra Finance and has directed that they cannot do any recovery through third-party agents. However, they can do so with their own employees. Now, what has prompted this action? The incident pertains to Hazirabad, where a third-party agent which went on behalf of Mahindra and Mahindra Finance has done unlawful activities, and police is investigating the case. But in the meantime, the regulator has sent this notification to bank, and it has mentioned it is still further orders, meaning the process of investigation will also continue on behalf of regulator. There is a loan and advances circular which has been released by Reserve Bank of India, and there are particular guidelines which recovery agents needs to be adhering, and this is not only applicable to the employees of the company who are going on field and doing activity on behalf of Mahindra and Mahindra Finance, but any employee who, even if it is third party, the responsibility remains on the company that the circular which has been released by Reserve Bank of India on loans and advances is followed in the letter and spirit, and hence now regulator has come into action. Sources also say that there might be further action on the company depending on what response it sends to the regulator. So a thorough investigation will be conducted by Reserve Bank of India, and after that only the regulator will see what further action, if at all it is needed on the company, needs to be taken.
All right, to speak more on this and the bigger picture really, I'm joined now by Raman Aggarwal, Director of FIDC, Mythili Bhusnurmath, Consulting Editor, ET Now, and R Gopalan, former Secretary, FinMin. Welcome to all of you, and thank you so much for speaking with us today. Let me go across to you first, Mr. Raman Aggarwal, and just, your take on the specific action by the Reserve Bank of India. Also explain to us why these third-party agencies come into place and this terrible behavior of loan recovery agents.
See, first of all, at the outset, let me clearly say that whatever happened in Hazaribagh is perhaps most unfortunate, most tragic, and certainly not expected. But let me also say that this is not kind of a thing which is happening frequently. It's a one-off stray case which has happened. Having said that, coming to the larger picture, number one, there are clear-cut RBI norms on outsourcing, including outsourcing for recovery. There is a RBI circular on repossession in case of default. Plus, there is a code of fair business practices prescribed by RBI. So, all these systems are in place as far as outsourcing is concerned. But the larger picture and the point which you raised as to why is there a need for outsourcing, I think it's a very important aspect. Speaking on behalf of the NBFCs and FIDC being the representative body, we to that extent would like to highlight that the legal system or the legal mechanism available for recovery for NBFCs is very limited. We only have, if you ask me, 2 or 3 modes of legal recovery mechanisms, which are very long drawn processes in itself. One, of course, is arbitration, which is a out of court settlement. But there again, in the light of the Supreme Court order, there are certain challenges. We have access to SARFAESI Act, which we got after 12 years of this act was enacted. But even now, for enforcing security under the SARFAESI Act, there is a rider of the loan ticket size has to be minimum 20 lakhs. So, in the light of the less legal recourse available, the obvious alternative left is to do what is called as a private repossession, and there the need for outsourcing comes in. However, as I said,
just ask you a couple of questions, sir. I've heard you out, and you've said that what happened in Hazaribagh is an outlier. You condemn it, rightly so. Anyone, who in the right mind would. It's impossible to imagine how someone would do that. But it is very obvious, very clear, and well known that in many cases, recovery agents do resort to pure torture techniques. And it might not be as extreme as running over someone and murdering them, because that's just murder, but the kind of harassment which drives people to suicide. And this is well known. The second question I want to ask you, you said that, our hands are tied as far as legal recourse is considered. Isn't it the same restrictions that lenders have when they have to deal with large borrowers who have all kinds of recourse They can go through several layers before they actually have to pay up a single paisa. So who is at the receiving end of these recovery agents or these private repossessors? It is the poor, it is the desperate, and it is people who have no backing from anyone. Mr. Raman Aggarwal, today I request you to address this issue seriously and in all honesty, sir.
Yes, absolutely. And I think you've raised a valid point. Now, if we look at the incidents of certain wrongdoings coming into the light as far as the recovery agent's behavior is concerned, we had a spurt of incidents happening in way back in 2007 and 8, where we even had a Supreme Court order on this very particular issue of repossession, subsequent to which we at FIDC had even come out with a handbook on repossession. And the system saw a certain regularity setting in, certain standardization coming in. Moreover, companies have also started resorting to the arbitration section 9, applying for court orders to do such kind of activity. The recent incidents which have come into the light, let's appreciate the fact, are majorly pertaining to the digital lending done through by the loan apps. And those are primarily done by entities who are outside the regulatory framework of RBI, because the very existence of these entities, who are they, is unknown. It's not very clear. And we have seen RBI coming into action, forming an expert group, new digital lending norms coming into place. So whatever has happened, as once again reiterate, is a stray incident, is a one-off case, and overall, if you see the industry picture in terms of the overall scenario of recovery and repossession, things have been streamlined to a larger extent because of all the systems.
I want to get in more views. Let me get in more views. R Gopalan is also joining us on the show. Of course, someone who understands the policy of this space very well. Mr. Gopalan, full disclaimer, you're also on the board of an NBFC. But I want to understand if there is no other way. And I also want to put it in this context of a recent RBI circular, which has made NPA norms stricter for NBFCs. Is that also a cause and effect that we're seeing, that NBFCs now have more pressure of recovery? And maybe this is where these recovery agents come in?
You are right to some extent. When NBFCs are applied the same kind of regulations, we want to bring them on par with the deposit-taking institutions. The non-deposit-taking NBFCs are brought on par with deposit-taking institutions for the purpose of regulation. Obviously, regulatory oversight becomes huge. And there's a pressure on NBFCs then to really measure up to performances, and especially if they are listed, then there is going to be that much pressure on them. But there are ways in which one can look at it. There is a philosophy. One is outsourced entity collection, another is the own collection. Now, there are NBFCs which do the own own staff collection, and they are doing it far better. The collection percentage is really high. They don't have, because they have a reputational risk, they don't indulge or resort to these kind of very tough ways of loan app kind of loans getting collected. They don't get into those kind of things. And therefore, it depends on what kind of a model one uses in running your NBFC. So that matters a great deal. The guidelines are there by RBI. It is a very, very detailed set of guidelines. Even Governor in June also pointed out the kind of mischief being made by collecting agents at this point in time. And in September, we have this kind of an incident. So then it devolves on the board of the company to do as the guidelines have set them to do. The role of the board, the role of the senior management, the risk evaluation issues, then outsourcing agreements, confidentiality. There are a whole host of issues which have been flagged by these guidelines, and how effectively the board of the NBFC is able to ensure that these are adhered to, what kind of a feedback loop they have for, guiding and monitoring these kind of activities, and the philosophy they follow to the letter and spirit, that matters a great deal in preventing these kind of incidents from happening.
Mythili, just to get your view on why these agencies need to resort to recovery agents. And lenders need to resort to recovery agents. Obviously, they're running a business, so they need to get their money back. One understands that. But I want to put it in the context of the RBI circular, which requires NBFCs to stamp NPAs daily. It also says that an NPA account cannot be upgraded to a standard asset category till all dues, including the compounded rate of interest on the loans, are paid upfront. So that, in a sense, increases the pressure, isn't it? Is there no other way apart from unscrupulous recovery agents?
Well, I don't know, Tamanna, you're right to tar everybody with the same brush and say they're all unscrupulous recovery agents, because yes, it is very unfortunate that a life was lost. But I think we must be careful to remember that we really don't have the full facts of the case. The inquiry is still going on. What we do have is press reports. So we do not know for sure whether the death was accidental or it was deliberate. So I think one must be a little careful before one pronounces the culpability of the recovery agent, who, mind you, was from Team Lees. So Team Lees presumably would have trained them adequately. The fact is, yes, it's very unfortunate, life was lost in the process. But the problem is that how do banks and NBFCs recover? How do they deal with recalcitrant, willful defaulters? We have a procedure in place for large corporates, courtesy of the IBC. But if you remember that there is no such thing provision in the case of individual defaulters. And let me also add that in the US, for instance, if somebody does not repay a loan, a car loan, for instance, there is no question at all. The lender seizes the vehicle without any questions asked. In India, we still don't have that kind of credit culture. So banks and NBFCs find it very difficult, given the legal system, to actually recover their dues. So yes, RBI does have circulars in place, but those prescribe a very ideal kind of situation. The fact is that borrowers very often are not even aware of the nuances. And given the level of literacy in the country, the kind of poverty in the country, and also periodic loan waivers, which makes people think that they don't have to repay, they can get away with it. So it's a combination of factors. This does not in any way condone what happened. But the fact is, I think one needs to think in terms of a larger picture and say that borrowers also must understand there is a credit culture. Recovery agents also need to understand that they cannot go armed with.
My question, Mythili, and I get your point that we need to know the facts of this case. But
yes.
I think it's fair to say that there have been enough instances and cases of recovery agents pushing people to the brink, where there have been disastrous instances. Now, I'm not blaming any one agency. My point is, and my simple question is, are there clear enough guidelines to ensure that the rule of law is not broken during recovery?
But where is the rule of law? When you have borrowed money, you have signed a contract note. So who has broken the law? The borrower who is not repaying, or the agent? Of course, I'm not saying that the agent can harm, twist and harass a person. But if you have taken a loan, you don't have an obligation to repay under the law. So yes, both sides need to understand that they need to create greater maturity and deal with the situation. The borrower must repay. If he cannot repay, he needs to go to the bank or NBFC and ask, are there any extenuating circumstances? Similarly, the recovery agent must also try and explain, give an opportunity to the borrower. But I think one has to be very careful in deciding that one's sympathies always lie with the borrower when he's a willful defaulter, and come down harshly on the recovery agents at all times. Yes, there may be a few who use harsh methods and go beyond the rule of law. But ultimately, I think we need to ensure that the borrower also has a responsibility to repay.
Which is why we want to balance this conversation and have both sides of the story. Rekha Agarwal is joining us. She's a Supreme Court advocate. Ms. Agarwal, thank you so much for joining us today. Mythili is right that not every recovery agent is unscrupulous. Maybe some of them are very kind and patient, perhaps. But like we've seen in this entire loan app scandal, where there has now been a very strong crackdown from the authorities as well. The Enforcement Directorate has come in. People's pictures were being morphed, and then there was a threat of circulation, and it led to some very dire circumstances. What is the redressal in law? Ma'am, I think you're on mute.
No, I'm not on mute.
Thank you.
Can you hear me?
Yes.
Yes. First of all, I would say that seeing your program, in fact, I'm reminded of this Shakespearean play, Merchant of Venice, and how, the pound of flesh had to be, extracted at all cost. And what was the final result? So keeping that in mind, I think that a balance has to be drawn, to so that the economy, of the country goes on. We have the lenders on one hand and the borrowers on the other. And Methali was right to some extent that yes, we can't paint everybody with the same brush, but and the rule of law applies to everybody. Just as the lenders are doing their business, the borrowers are borrowing money because they have to run their lives. So both are, in fact, trying to run their lives under the constitutional mandate, which gives them a fundamental right. The borrowers are lending money because it is their fundamental right to do business of lending money. The borrowers are borrowing money because they want to run their lives in a peaceful manner. So how do we draw a balance? And the constitution of our country says that you can't condemn anybody until you hear the other side. So simply because a borrower has borrowed money and has not paid the money in time, and we brand him as a willful defaulter, there could be, 101 reasons as to why the money has not been paid. So I think that before these private mechanism is enforced and these recovery agents, I understand the anxiety of the lenders that they have to recover the money, and that the legal procedure is no doubt slow. We have arbitration, we have the SARFAESI Act, but the SARFAESI Act also comes with its riders, and then ultimately people go to the court and get an injunction order, either from the DRT or from any other court. And the matters just linger on and on. But now the courts, the legal mechanism is not as lackadaisical as it appears, and ultimately the courts are also mindful of the fact that the borrowers, have to return the money, and it is not as if they're always the underdogs, and the sympathy goes to them. So therefore, I think the checks and balances have to be drawn. I do not personally feel that outsourcing it, by privatizing the entire issue and giving the reins in the hands of the private recovery agents, that is going to be like an unleashed power. Though of course Hazaribagh incident may be one off the cuff, and there could be many reasons. It could not be as obvious as it appears on the screen. There could be any other reasons which will ultimately decide whether the recovery agent was responsible for this unfortunate
At the
incident or
Reserve
not.
Bank of India,
Yes.
on the basis of material, information they got, took this decision, is something that we have to also keep in mind. It's not like they read this one report and made that
Yes,
decision.
I
One
appreciate
assumes.
that. Yes.
And we've also been running some of the other cases. I want to understand the outsourcing part of it. Mr. Agarwal, if I may come back to you. Recovering money that you have lent is your right. It's a business practice. It needs to be done. If someone's borrowed, they need to give money back. I understand that. Why the requirement to outsource? Is it a cost efficiency measure? Is it to give some sort of legal distance from the actions of that company? Because you will have to get tough to actually recover money. It's not an easy job, let's be honest. What is the reason that so many organizations or lenders choose to outsource this particular job?
Valid point. I think the key element we need to remember here is time. And as we say, time is money, especially for financial intermediaries like NBFCs. We borrow money, we lend money, we are intermediaries. And as you said, there are norms prescribed for classification of assets as NPAs, etc., etc. So it's the time value. To expect a company having, say, thousands and thousands number of retail loans given to individuals and small borrowers, to expect each and every case recovery to be done by the company's own employees is, I think, perhaps stretching things too far, more in the light of the time element. And that is where the need for outsourcing comes in. Now, the bigger question here is that are we doing it correctly or wrongly? While the systems are there in place, the regulator has put prescribed guidelines, and that is why regulator felt the need. Why did they come up with such guidelines? They could have simply said, don't outsource it. So even now, if they've taken an action, it's a temporary measure. Let me tell you, while the matter is under investigation, as pointed out by the other speakers, RBI has in interim measure taken this step to stop the company from doing any private engaging outsourcing. But there is no blanket ban on outsourcing, because The regulator also realizes.
I get that. So you're saying
it
it helps save time. It helps save time and
time more so in the context of the need to recover money in time. That is the more element, because otherwise you will see a spurt in NPA, spurt in level of the asset quality suffering. So I think all in all picture included, we need to keep that larger picture. The legality here comes in. Everything that happens between the lender and the borrowers is very well enshrined and mentioned in black and white in the agreement. The loan agreement.
Are you liable for the action of this company? Are they liable? Rekha ji, I want to understand, is the lender liable for the actions of the recovery agency? And
yes, definitely.
Their recovery agents' actions?
Yes, definitely, because the principal is responsible for the acts of the agent. So if the lender outsources the work and gives it to a private recovery agent whose only object is to justify his job by meeting the target, if the recovery agent also doesn't achieve the targets, then the lender is going to say, why the hell have I employed you in the first place? So therefore, I feel that this outsourcing, I do not agree with this outsourcing bit at all, because howsoever many checks and balances that the lenders may employ and say that we are trying to keep it within the legal framework, the chances of abuse of power are very strong.
Rekha ji, since I'm out of time, but I just want to get one piece of information from you for those who are watching, that if anyone feels that they are being unfairly pressurized for recovery, and of course, you have to understand you have a fiduciary responsibility to return a loan you've taken. You can't become a willful defaulter and say, I don't want to give back the money. There's a process then to be followed. But if you feel you're being unfairly targeted, you're being threatened, blackmailed, etc., what is the legal recourse you have?
The first and most simple recourse is to inform the police about it. And though, of course, the police is very often reluctant to register the complaints and convert them into FIRs because they make it out to be a civil dispute. But you must register your complaint by dialing the 100 telephone number and go and make your complaint, get a stamp on it. And if the police do not take action, because whether you return the money or not, that is a civil problem. But threatening you, blackmailing you, trying to extort money, even though you're liable to return that money, but arm twisting you to get that money is an illegal act. So even the lenders cannot take law in their own hands. And if any borrower feels that his life is in danger, some unfair means are being employed to for him by the lenders, then
you can go to the police. Yes, Ramanji, you wanted to come in very quickly. Yes.
Yeah, in addition to what Rekha ji just said, let me also clarify, RBI has also put in clear systems for grievance redressal. The borrower can not only lodge a complaint with police, he can even report to RBI. There are various ways.
Of course.
There is an ombudsman scheme, which all these details are mentioned in the agreement.
That's important. There is an ombudsman scheme. It should be working. Yes, Mr. Gopalan, you wanted to come in.
Yeah. Yes, sir. Yeah, I want to say that there is an ombudsman scheme which is there, to which the complainant can make a complaint apart from dialing to the police. And but one point I want to give here is about the efficacy of collection through own collection agents as well as on outsourcing. See, on own collection agent, the process is much better. The LPAs are much better as compared to other outsourced collection work. But you must employ more of technology in understanding the psyche of the customer, the psyche of the collection agents. Do a proper credit assessment of the borrower when you do the loaning. So there are a lot of things that technology can be used. Artificial intelligence is being used.
Absolutely.
We
do
quite heavily. So those are the things that should be done to ensure that we are able to avoid these kind of situations arising in future.
Prevention is the way to go, especially from the side of the lenders. Absolutely. I've run out of time, but thank you so much. Thank you so much to all of you for joining us on this very, very important conversation, because it's not in black and white. Lenders do have to recover their money. They cannot be saddling the financial system with massive NPAs, but nothing condones illegal behavior. Thank you so much once again to all of you for joining us.